This is Alan Bush with ADMIS. In the stock index futures, we did see the S&P 500 and the Russell 2000 making new historical highs yesterday. However, we are seeing a little pressure this morning. Prices are lower, and there is still some ongoing concern about the possibility of additional political problems in Greece as being a bit of a negative. The reason that this is a negative is that it could potentially undermine plans for additional quantitative easing in the Eurozone. Of course, more QE in the Eurozone is supportive to stock index futures globally. However, we feel that the long-term trend remains higher for stock indices, and even though we are a bit lower today, I think we can see at least a partial recovery. So going into next year, I think we can see the bull market continuing for stock index futures. Over to currencies, the dollar index coming under a little pressure today, this after yesterday making a new 5-year high. So most of the other currencies are higher in response to some long liquidation we are seeing in the dollar. Good gains in the yen today, this after the Bank of Japan announcing that they are going to start buying longer dated debt. And what this basically does is it alleviates some of the downward pressure at the short end of the curve, and that would be supportive to the yen. However, we feel this is likely to be only a 1 or 2 day influence. Longer term, still looks like the yen is going to trend lower as the Bank of Japan most likely adds more stimulus to their banking system next year. Also some gains in the Australian dollar with commodity prices firming a little bit in the overnight trade, mainly some of the metals. Even the oil was a little bit higher for a while more recently this morning. Longer term though, feeling that the Australian dollar will continue lower into next year, and that the higher prices we've seen over the last couple of days will not continue. And in the interest rate markets, good gains as we are seeing second day of follow-through strength in light of the political problems in Greece, so some flight to quality buying coming into Treasuries. Also, we did have 2 U.S. reports this morning coming in on the weak side. That is supportive to Treasuries. Consumer confidence and U.S. home prices both weaker than anticipated, so that bringing in some additional gains in Treasuries. Still thinking longer term, the 30-year bond will be the leader to the upside, so look for good gains in the first part of 2015 at the long end of the curve. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.